Welcome to today's episode of the Simply Financial Podcast. I'm your host, Christopher Calandra, and I want to increase your financial IQ with today's discussion about bull and bear markets. So we've been in a bull market, read that as an up market, since October of 2022. It's been a great run. As of this recording, the bull market is over 1,212 days old. This bull market will end. They all do. Corrections and bear markets are normal, inevitable even. But I want to look at things from a historical perspective for a little bit. There was some research that came out in early 2026 from Bespoke Investment Group. They published some comprehensive data. And what they did using the S&P 500 as a proxy for the market, they compared the length of every bull and bear market since the start of the Great Depression, so September of 2029. What they found is there were 27 downturns of 20% or more. We're going to define that as a bear market. Only 1/3 of those, which is 9, reached the 1-year mark. The average bear market, this analysis tells us, was 286 days, or about 9.5 months. For perspective, the longest bear market was 630 days, which is almost 2 years, and that was in 1973 and 1974. So just to review, bear markets, 27 of them since the Great Depression, only 1/3 reached a 1-year mark. The average number of days was 286, about 9.5 months. And for good measure, the longest one was 630 days. Now, when we look at bull markets last an average of 1,011 days. 1,011 days. So bull markets last, on average, a lot longer than bear markets. Over the period since the Great Depression, there have been 10 bull markets that have lasted over 1,200 days. So somewhat unusual, but not unprecedented for us to be in this bull market that has lasted over 1,200 days. So the lesson here is that the average bull market lasts 3.5 times longer than the average bear market. So that's encouraging. And this is part of the reason why the conventional wisdom, the wise advice, is to invest over the long term, to have a buy and hold component to your investing, because bull markets tend to last longer than bear markets. Additionally, when you look at returns, bull markets, because of the greater number of days on average, also produce much greater returns than the losses in bear markets. Those losses during bear markets are always upsetting and disheartening. There's usually a lot of fear, but this is some encouraging historical perspective, I think, that bull markets last on average a lot longer than your average bear market, And we are in a great bull market that began since October of 2022. I don't have a crystal ball. I don't know how long this one will last. As we've communicated to you, the team and I at Elliott Wealth Management Services, and on this podcast, we believe the trend is your friend, and there is a good opportunity for 2026 to be a year where we could stack on returns that we've built up the last couple of years. So that's my talking point for today. I hope you found the information beneficial. I'll be back with you on the next episode of the Simply Financial Podcast very soon. In the meanwhile, please subscribe to this podcast, and you can always go to our site, elliottwealth.com, to learn more about the work that the team and I do as we help our clients win with money. Thanks for listening today.
The views expressed are not necessarily the opinion of Osaic Wealth, Inc., and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of information provided at these websites. Nor is the company liable for any direct or indirect technical or system issues or any consequences arising out of your access to or your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through Osaic Wealth, Inc., member FINRA, SIPC. Insurance services offered through Elliott Wealth Management Services, LLC, not affiliated with Osaic Wealth, Inc.